Hey everybody, it's Ken Perry from Broker Knowledge Group, and for this week's Wednesday update, what I want to talk about is credit scores. And the reason I want to talk about credit scoring is because the Consumer Financial Protection Bureau just came out with a study on credit scores and if they confuse the consumers. And so let me give you some background on that. Dodd-Frank, that huge bill, had this little piece in it that required a study of credit scoring. And the thought process behind it was a borrower walks into a mortgage broker or mortgage bank and tries to get a loan. And the mortgage broker, mortgage bank pulls their credit, and they use what's called a FICO model. So they pull the credit and they give them their score, and let's say it's a 660 credit score, which is used to be awesome and qualify you for whatever you want, but now apparently it's not so good. So the borrower gets a 660 credit score from their loan originator. The loan originator has that discussion with them about any add-ons and whether or not they qualify, all that stuff. Well, the borrower then goes home and pulls up on free, cool, wicked, neat creditscore.com. They pay $9.95 or they sign up for some monitoring service and they get the credit score that is offered to them by that website. Now, in many cases, that could be like a 950. Well, then they go back to the originator and they're like, what's up, chump? You say I have a 640. Really, I have a 950. I walk on water. And the loan officer's like, whoa, what's going on? Well, when you compare them, it could be really confusing. So now the loan originator's got to explain to the borrower that the 950 really doesn't exist, that's just an educational score. It can be crazy tough for consumers to actually get all this stuff and how it's all calculated. So what the Bureau is required to do based on Dodd-Frank Section 1078 is study credit scores and that model to find out if it is confusing to the borrowers. I'm going to give you 2 seconds to do the study on your own. Are you ready? Go. Yeah, so you pretty much figured out it does confuse the borrowers to have two scores that are totally random and different. So the new report that just came out, and it came out on July 19th, it's called The Impact of Differences Between Consumer and Creditor Purchased Scores. And I just read it. It's pretty interesting. So here's what it says in basics. First off, scores, it talks about the impact of credit scores and how everybody's using them and you can get them from all over the place, and you have the consumer score that they can buy online and the mortgage score and all that. What I didn't know, and this is kind of interesting, is who actually owns the websites that offer free scores. Check out this chart they put in their study. So as you can see, the credit reporting agencies actually own the websites like Free Credit Score and freecreditreport.com. Experian, Equifax, and TransUnion are reselling informational scores to the borrowers through separately branded websites. Did you know that? I had no idea. I thought freecreditscore.com was some random website, but apparently that's owned by Experian. So check this out. Experian, Equifax, and TransUnion sell what's called an educational score to the borrowers. And the educational scores are not the same range as the FICO score, and they're not calculated the same as a FICO score. So for example, the FICO score range is between 300 and 850 depending on which model you're using. The educational score, like the Equifax credit score, is 250 to 850. The Experian score that they sell to people, called their plus score, is between 330 and 830, and the TransUnion score is between 300 and 850. The TransUnion score is only based on your risk on new trade lines, not used or older trade lines. In addition, borrowers have to deal with the Vantage score. Vantage score's got a 501 to 990. So I mean, you can't even show up on the same level as you would with a FICO score in some of these models. And then you have the credit expert score, which is it's not a predictive score, it's just a best guess at what your other scores are gonna be. And that's the one where you can go in and do if-then scenarios and find out, if I did this, would that increase my scores? And so that's even an informational score or educational score. So the borrowers have no shot at getting anything consistent. If you're doing loans right now, or if you know anything about loans, you know that your FICO score can actually change from one day to the next with very little changes in your credit report. So for the borrowers, this can be really confusing. Now, good news is they're addressing it. So the Bureau's already out there. The Bureau already did this report. The Bureau will then follow it up with an analysis of 200,000 credit scores, and then they're going to compare those credit models against the ones that they would get from the other scoring models. So look for it probably later this year, potentially by next year. You're going to see that report come out, which will show us just how bad these score differences are. But for now, what I want you to do is just know that this report exists if you're a loan originator, this report will help you explain to consumers that you're not a bad guy, that you are giving them the best, that mortgage score, the score that they're going to need to use if they ever want to qualify for a loan. And hopefully you can kind of pull from that report to be able to better explain it to consumers. Sometimes it just takes a little bit of backup so that we don't look like a bad guy. All right, so that's your update on credit scores for this week. Let me give you a couple other quick updates. Another update would be the Case-Shiller Index. As you know, the Case-Shiller Index came out, yesterday, and it's looking good. And by good, I mean not as bad. Looks like we're on the mend in some areas, so you can analyze that. I'll throw a link to that down at the end of the video. And then in addition, and just kind of parting notes for you, because hopefully that information is going to help you out that I gave you already. Parting notes for you though, we are doing classes all over now. So I'll be flying out to St. Louis on October 6th, doing a class in conjunction with the NAPMW. Be up in Seattle a couple times in October, be in Portland a couple times in October. We're gonna go down to California, it looks like, in October. We've got Hawaii coming up at the end of September, beginning of October. So we're going everywhere. If you wanna bring us in to do your NMLS 8-hour CE, give us a call, go to the website, brokerknowledge.com. The other thing is we just submitted our first online class, so we're actually going online. It's got a lot of videos, kind of like the one you're seeing in that, so that you don't have to be bored taking your internet classes anymore. So anyway, keep in touch. We'll see you guys next week. Hopefully this update helped.